No surprises from Raghuram Rajan this time round. Playing straight from the script, the RBI governor kept benchmark interest rates unchanged today, saying that inflation still remains a bigger concern for him. But unlike the last policy this time round, he sounded dovish, saying that prices are clearly on the bend. And the RBI governor also made it clear that the next rate cut will come only after banks pass on the full benefits of the previous rate cuts by the central bank.
But the market is clearly not amused. Benchmark indices plunged soon after Rajan unveiled the bi-monthly review, although there was some recovery towards the latter part of the trading session. The Sensex finally ended the day with a loss of about 100 points. Rajan also cleared the air on the proposed monetary policy committee and said the central bank has reached a broad consensus with the government on this crucial issue, indicating that he is ready to forego his veto power. Rajan says the stability and composition of the monetary policy panel is more critical. The key takeaways from the RBI policy review, that's our top story on Business Tonight.
The suspense was over by the time he arrived at the 25th floor conference hall of the RBI headquarters. And no surprises this time around, as Governor Raghuram Rajan played straight from the script. No interest rate cut and a status quo on other key parameters like the CRR and SLR. Unveiling the bi-monthly monetary policy review, Rajan said inflation is still a concern, although the tone was clearly dovish.
We're looking for whether the recent increases in inflation were temporary and whether the monsoon will continue to be near normal. The oil price development is very beneficial, and we will await greater transmission of our past front-loaded actions while we look and monitor developments for emerging room for more accommodation.
Unlike the last policy, when his hawkish stance, despite a 25 basis points rate cut, signaled the end of the rate cut cycle, this time around he sounded more positive. Rajan made it clear that he wants more clarity on inflation, monsoon situation and the Fed rate action before he decides to cut rates further.
We started cutting rates in January. I would start seeing the effects of that rate cut only in September, October, November. And this is something people have to remember when they look at rate cuts. We have to forecast what is going to happen in the economy 3 to 4 quarters down the line, not what is happening currently in the economy, in order to gauge the impact of any rate action that we take.
Many believe Governor Rajan's wait-and-watch policy has come at the cost of growth. They point out that many crucial sectors like power and steel continue to reel under stress for want of funds. But Rajan is clear, a repo rate will come only after a greater transmission happens. Are banks listening? Kopika Kumar, ET Now, Mumbai.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.